We're here today to launch our July bi-monthly report focusing on trends and transactions in all sectors of the Irish commercial real estate market in the first 6 months. It certainly has been a very busy 6-month period, and it is expected to remain particularly active over the course of the rest of the year. A key theme that we've noticed this month is that the recovery that was firmly established in Dublin and ultimately began to filter out to suburban locations is now keenly being felt in provincial locations across the country, and that has been the case over the last number of months. We might experience the traditional summer lull in many of the occupier markets during July and August, but the likelihood is that the investment sector of the market will continue at pace, with several high-profile loan portfolios currently on the market, not least Project Jewel, which includes the infamous Dundrum Town Centre, but also quite a number of sizable assets currently being marketed for sale and several others being prepared for sale in the autumn. We continue to see strong demand from a range of different investor types, and recent sovereign upgrades for Ireland have helped in this respect, bringing many new investor types to invest in the Irish commercial real estate sector. Prime yields remain stable, although high street yields have continued to contract over recent months in light of new market evidence. We continue to see rental growth emerging, particularly in the retail and industrial sectors, following the trend seen in the office market earlier in the year. Recent notable sales have included the sovereign portfolio of office and retail properties, which traded for more than 155 million, an interest in the Riverside 1 office building in Dublin Docklands, which traded for more than 80 million, and Manor West Retail Park in Kerry, which recently traded for approximately 59 million euro. On the market, there were several sizable portfolios, as mentioned, including the national portfolio of retail parks, which is guiding 162 million, and Block R office building in Dublin Docklands, which was recently offered for sale, guiding 90 million euro. In the office market, we've continued to see a large number of transactions being negotiated in recent months. However, many of the larger requirements that were in the market late last year and in the early part of this year have now been satisfied or are close to being agreed. So we're now waiting on the next wave of demand to materialise. The next wave of demand is likely to come from Indigenous companies. Indeed, one of the biggest requirements that has recently been launched is the National Treasury Management Agency, or the NTMA, who are looking in Dublin at the moment for between 70 and 80,000 square feet. We've also seen an increase in the number of companies that are subletting and assigning excess accommodation, which has been quite welcome because it's easing supply pressures to some degree. However, outside of the Grade A market in Dublin 2-4, occupiers still have plenty of choices, and there has been a notable increase in demand for opportunities in suburban locations and indeed in provincial markets over recent times, driven to some degree by escalating costs in the traditional CBD. Prime rents in Dublin 2-4 are currently in the order of €538 per square metre or €50 per square foot, and negotiations are currently ongoing at higher than this level again. We've also seen rents in other locations starting to increase, particularly rents in the south suburbs, which are now in the order of €269 per square metre or €25 per square foot. By our reckoning, there are 16 new office schemes under construction in Dublin today. 6 of these have already been pre-let, but certainly the ability to negotiate a pre-letting is considerably more feasible now than it was even at the beginning of the year. We've continued to see appetite in the retail sector also. The most recent statistics from the Central Statistics Office demonstrate that retail sales volumes have increased in each of the 19 last consecutive months. There's clear evidence of recovery coming through, and thankfully we're also beginning to see this filter down into provincial locations. There's good demand for the best shopping centres, certain provincial high streets, and strengthening demand for retail parks, particularly where units are less than 5,000 square feet, and equally at the higher scale of 15,000 square foot plus. We will expect to see continued upward pressure on retail rents over the course of the next couple of months. One of the sectors that's performing particularly well is the food and beverage sector and the restaurant sector. We've seen strong competition for the best locations in this particular sector. We have a number of occupiers at the moment, such as Gaucho, Freshie, Zizi, Ask, Le Pan, to name but a few, actively looking for opportunities in the Dublin market, where Barlotti have recently opened their new store on Bagot Street in the capital. Activity has also been brisk in the development land market, particularly for good residential sites, but we're also seeing active requirements from office developers student accommodation providers, and indeed hoteliers. According to CBRE research, there were 54 individual development land sales completed in the first half of the year, totalling 276 million between them, versus a spend of 203 million in the same period just last year. We're now approaching second round bids on the large Project Trinity scheme, which is likely to set a record price for the Dublin market. In recent weeks, we've had the public listing of Cairn Homes, which is a very significant move for this particular sector. This entity have recently been involved in a number of high-profile transactions, not least the acquisition of over 8 acres at the Marianella site in Rathgar for more than 40 million euros, and also a site at Brennanstown Road in Carrickmines, for which they paid more than 18 million euro. In recent weeks, we've also had the formal launch of the Cherrywood scheme in South County Dublin. This is an exciting development which can provide up to 3,800 new homes, as well as high-profile office and retail property in the south suburbs in due course. There's also been an encouraging number of planning applications over the last while. In fact, planning applications for residential developments more than doubled year on year in Q1, but from an extremely low base. We need to provide significantly more than this to cater for the demand that's in the market at the moment. And with that regard, we're all eagerly awaiting the Urban Regeneration and Housing Bill, which is reportedly imminent, and hope that this will alleviate some of the pressures on the supply side that are in the market at the moment. We've seen a huge amount of activity on the hotel and licence sector of the market. Indeed, 39 hotels totalling 575 million traded in the Irish market in the first half of the year. And this is excluding the large number of hotels that have been trading as part of portfolio sales, such as Project Coney, which recently traded and contained quite a number of hotel assets. In recent weeks, we've seen the completion of the Crystal Collection, which was a sale of 7 provincial hotels offered by NAMA for sale earlier this year, guiding 35 million. Each of the 7 assets have now transacted, all to different buyers. There are a number of very high-profile hotels on the market at the moment, such as the 5-star Castle Martyr Resort in Cork, which is guiding 13 million, the Aberley Court Hotel in Tala in Dublin 24, which is guiding 2.5 million, and the Cashel Palace Hotel in Tipperary, which is guiding 2.25 million. There will be strong appetite for these hotels, and we're expecting to see another number of high-profile hotels being prepared for sale over the coming weeks for release in the autumn. This is another sector where we're continuing to see quite a bit of planning activity, with lots of applications being lodged and plans being prepared for new hotels and indeed extensions to existing hotels. And when the Project Trinity sales process is complete over the coming weeks, this will fuel this process. But certainly in this sector, a busy autumn appears to be in prospect. 9 pubs traded in Dublin in the first 6 months of the year, totalling 11.4 million between them. And on top of this, there were also a large number of pubs traded as part of the various NPL loan sales that occurred in the market over the last number of months. So all in all, it has been a very, very busy first half to the year. A very busy autumn is in prospect, and indeed we continue to see activity throughout July and August, particularly in the investment sector of the market.